Welcome to Trade Tribe. So today we are going to look at fundamental analysis in Forex. As you know, fundamental analysis plays a major role when it comes to trading. So I'd like us to have a clear insight of what fundamental analysis is, so that if you maybe want to dive more on fundamental analysis, you'll know where to start and what to do exactly. What comes in your mind when you hear the term fundamental analysis? So fundamental analysis, these are the economic. They are the real world drivers behind the market, the forex itself. That is, and things like news, politics, and economic are the fundamental factors that determines what's going to happen in forex. So the first question maybe you're supposed to ask ourselves is why do we need fundamentals? Yeah, as I've said, they are the real world economic grid to global currency prices. Yeah, they're the one, things like news, politics, and economy. They're the one that drives the economy of a country. So understanding fundamentals equals to understanding the market direction. Yeah, so what we're going to do, let's look at different types of fundamentals. So we have two different types of fundamentals. We have the microeconomics and the macroeconomics. The microeconomics, we are going to give less focus on it. And microeconomics, these are they focus on individual market drivers like supply and demand, consumer behavior. Others, they have no more effect on trading. So our major focus will be on the macroeconomics. This one, focusing in they focus more on the economy as a whole. Things like inflation, global domestic price, employment rates, national debts, and etc. So this is our major focus on the macroeconomics. So we are not going to focus on the micro, and I'm not going to discuss about it at all. So we have three main types of macroeconomics, which you are going to give more priority on them. And to start with, we have the central bank, the geopolitical events, and the economic data. The central bank, these are larger economic banks in the world, maybe like the Federal Bank of England, UK, USA. The geopolitical events, these are things like recession, war, and etc. So the economic data, these are short-term effects that have less effect on a currency. So on fundamental, no. So you are supposed to know that on fundamentals, it will not be our center of focus. We'll focus on the chart, but the fundamentals will also help you to know what to do when you are doing your technical analysis. And again, you should know that fundamentals do not provide us with additional clarity over the direction of a market sometimes. Do not come with various forms of the different importance. Though it can help you to trade confidently and logically in line with trends. You understand? So let's start with the central bank. You said the central bank. We have example of central banks. We have a Bank of England. We have Bank of Canada. We have the Federal Reserve Bank of Australia. Reserve Bank of New Zealand. European Central Bank. Swiss National Bank. Those are the example of central bank. So on the central banks, what you are going to focus on are the interest rates and the monetary policy. These two we are going to focus on the central bank and the economic rates that are released by the central banks. So interest rates, this are decided every month by each central bank. Yeah, and they reflect the economic performance. They also help to determine the statement, whether bulls or bear. So you know what interest rates are. I won't talk on this podcast episode. I'll not discuss into depth what the interest rates are, how do they correlate with maybe things like bonds and stuff. Or I won't talk much about them, but I'm going just to give you the insights. Maybe on the next episode, we're now going to look at each factor by itself and everything that is inside that particular factor. And so what we are going to do, I'll not get into depth. So if you want to get into depth, you can do it by yourself. Maybe after this episode, yeah. So we watch the rates decision every month, and another thing, you maybe have heard about things like hawkish, neutral, or dovish, and you wonder what these terms means. When you talk about hawkish, these are the rate hikes. Yeah. When the interest rates are hiked, we say the bank have gone hawkish. If they release their release is neutral, or we say that we have no change. Yeah, and for dovish, those are late cuts. Maybe the late cut, the previous rate was maybe 4%. Now they have reduced it to 3%. Now that's late cut, of which we say it dovish. If you are a forex trader, I know you have maybe come across these terms, but if you have not, don't worry at all, because maybe you are going to get it into depth on that maybe when you get to follow my podcast, and that is. So let's look at the monetary policy statements. Yeah, they also released every each rate after every each rate decision, and the function of monetary policy, they reveal the why behind the rate decision. Remember, after now the central bank have raised the interest rates. Now they'll also release the monetary policy, which will explain why they hiked the interest rate or lowered the interest rates. Why the central bank maybe raised or cut the interest rates. You understand? Yeah, they can also be used to help us to determine the currency direction. Also, monetary policy works hand in hand with interest rates. Yeah, and they are going to provide clarity of our simple interest rate charge. So, understanding monetary policy statements, what do you do to understand it? Okay, the statement talk about the current states or things to consider at that time, like the real world events, consumer spending. We have things like inflation and deflation, riba in market, gross domestic product, cost of living, all those stuffs. You can go check the monetary statements, and the ones that are released by the Federal Reserve of United States of America, on their site. So those things that I've mentioned, the real world events, consumer price spending, inflation and deflation, they are going to be included in the monetary policy statement. And this one, they also help us to gauge the currency direction and how the economic is going to perform, maybe in a particular month, and that is, and where the currency is going to move in the future, and trade in which direction. You understand? Yeah. So as we have said, the interest rates and the monetary policy, they work hand in hand, and they provide clarity that give us confidence to our trading. Now let's look at the geopolitical events. These are the real world events that affect the economy. Example of geopolitical events, we have like trading relationship, things like recessions, things like pandemic, war. The way down on a currency in a way or the other. Maybe for now, you know that there's a probability of recession occurring, uh, like the one that happened in 2008 and to the year 2011, 2012. So, but we are not going to discuss that. Maybe I'll discuss in the next episode. Also, things like pandemic and all. We know there's a war between Ukraine and Russia, but the war is between NATO and Russia or something. So that one is affecting the economy of a country, and we have seen that. If you're a keen person who follows the international news, we see what happened in Europe. And the way they were undergoing high price of oil and a lot of high inflation, high hot price of goods and services. Like everything was in a mess in Europe, and it is still there till today, till now. And they went to an extent of trying to come to Africa to convince them to so that we can sell our oil to them, so that they can be able to continue their daily lives. But some African countries did not accept that, because the Russians, the Russian president Vladimir Putin had cut the supply of oil in Europe, and without energy, things are going to slow, and some of things are not going to work, and that one will lead a country to experience high cost of living and inflation and all those stuff. You understand? So, like, and also there was a recent geopolitical event that happened. I don't know if you heard the story, though it was back in 2019 or 2020 something. The Brexit and the coronavirus also, that also affected the country, the world itself. Yeah, it had a very huge impact. Yeah, so like how they affect the market is cause uncertainty for market participants, for investors and traders. Example, like the Brexit made the GBP, the Great British Pound markets, particularly volatile. So go do more research on that. They can also dramatically strengthen or weaken a currency. Example, maybe a recession can weigh on a currency for a long time. Rising of oil prices will boost things like the Canadian dollar against other currencies, and CAD will be strong, because Canada, I think it's number one in the world that supply a lot of oil. I think so, if I'm not wrong. Yeah, things country like Russia, country like which other country? That country like UAE, is it Saudi Arabia? Yeah, if the price of oil goes high, their currency are going to be very strong. You understand? So they also cause changes in supply and demand of a currency. For example, if a currency is weak, it will lose its demand. When a currency is strong, the demand affects the market, taking up the supply. You understand? So the other thing is the change in supply and demand causes a change in currency value. Yeah, maybe when a demand falls of a currency then it becomes less. A currency becomes less. After the value falls in sweeter. Yeah, and again, if demand rises, supply brought up, making a currency rise in value. So we can look at the example of geopolitics. We have the referendum and elections. Maybe like the Denmark referendum. You can go check on that. We have the Crimea referendum, the Brexit referendum. The Brexit happened in Great Britain. You can go check on that. That's what I'm certain of. Yeah, and the ongoing effects that are current. Maybe things like the G7. You all know about the G7 and the IMF meetings. They happen every year. Yeah, the news headlines that they cause a big spike when those meetings are held, and when they release maybe a certain speech, they cause big spike in the market, especially for those currencies and those 7 nations, the G7 nations. And the spikes are unpredictable trading condition, because we all don't know what they are going to discuss that day, and how the release will be. So that's what makes what the market do what, go to either direction. Yeah, we have also the recessions and war, long-term negative way for a currency, strong downtrend. If there's a recession or a war, the currency of that particular country that we have a recession or war, it's going to be affected in a very huge way. Maybe let's say we have like the war that was here on 2007 to 2008, the crisis that was here in Kenya. That crisis affected the economy of a country because, number one, no tourists were coming in Kenya to visit us. Okay, there were tourists who were coming, but the number compared to maybe the previous year's number of tourists who are coming here to visit us, and that of 2007 to 2008, you'll maybe find that the number was small. Also, when the country was experiencing Al-Shabaab attacks, that means our country, Kenya, had what? Had like what? No security. There was no enough security, which made other countries to alert their citizens that Kenya is experiencing insecurities. So when you go there, be careful. When you do this, be careful. So you find that the economy of a country is not growing at the expected rate, or maybe things like what? Things like recession. Recession affects a certain country. Maybe like last year, USA or the NATO whatever group imposed sanction on Russia, and the Russians could not do trades with other country that were related to NATO, and also other countries that were not also for NATO, because they were fearing that NATO could also impose sanction on them. So, I'm talking about recession. Okay, that's part of sanction. There's difference between sanction and recession. Sorry, forgive me about that, but I'll explain both of them. So, what I'm talking about is sanctions. Like when a country imposes sanction on a certain country, that means the trade between that country and other nations is not going to happen the way it was expected. I was giving an example of Russia. Last year, NATO imposed sanction on Russia. They said you cannot trade with us, and so that they cannot sell their oil, sell their products, to get money to fund their soldiers, so that they can be able to fight back on Ukraine. But that did not happen, though, as they expected to happen. And rather than the economy of Russia boomed up almost twice. And hey, that's shocking. So the recession is whereby a country is experiencing financial crisis, and their banks start falling, and the economy of a country falls down completely, like what happened in 2008, and what's about to happen now this year. I'm expecting that there will be a recession in the United States of America, after looking at the 10-year bond and the 2-year bond curve, how it is. It is below the 0% level, and it's now starting to buy off towards that 0.00% levels. But before it gets to that 0.00% level, the economy of that country will already have crashed. Yeah, that's how it happens. And we have started seeing the signs like was it 2 weeks ago? Like 2 weeks ago, a bank in USA crashed. Actually, they crashed, and there are more coming to. There are more banks coming to crash. Why? Maybe because the banks bought the bonds from the government so that they can secure what investors are what people are investing on their banks and stuff. Then the Federal Reserve of United States of America keep on hiking interest rates. When they hike interest rates, the value of bonds goes down. So the investors will not have trust on that thing again. So they end up losing their money. The banks end up losing their money. And remember, what banks do, they lend money to people, the money that's not there. So, and all the other money that people keep on investing in those banks, the banks take those money, they go buy the bonds. Now, what's happening now? Yeah, the president of Federal Reserve, this guy, what's the name of this guy? Yeah, Powell is keeping on hiking interest rates. When he does that, the economy of a country will crumble, and I don't care though. Anyway, yeah, so those are the examples. Other thing, now, how do you use the geopolitical? How do you use the geopoliticals? So understanding the geopoliticals will help you to filter trade ideas. Like don't buy long term in a recession. Don't sell when the economy is booming. You understand? Yeah. So trend in line with economic backdrop. So maybe good apps to maybe help you to track geopolitical news. We have the example of Economist Exposure. No, Economic Expresso app. You can check in your Play Store. Yeah, and download it. We also have the Bloomberg. We also have this application called the CNA. This the CNB or what? Yeah, the CNBC. They'll give you about all news about the geopolitics. So let's look at the economic data. So the economic data, this refers to news, meeting and figures from central banks and government, like things like unemployment rate, interest rate, GDP, the conferences. Yeah, this data shows the economic performance of a specified time, like monthly, quarterly, annually, reports on different topics. You understand? And the economic data, they has varied impacts. Yeah, different level of importance. Like some data has massive effects. Some has an unnoticeable effect. Yeah, you can tell that from the Forex Factory calendar. You can go check those news. Some of them, when they happen, and you'll find that they are not volatile, or the market will do nothing. When you come to check on your TradingView or your MT4 or whatever site you're using to trade, you'll find that during the time of that release, the effect is negative to the graph. That's what I'm saying. So let's look at the different types of economic data. We have high impact data, which are maybe the unemployment rates, the interest rates. Yeah, they have direct economic drivers that lead to state of an economy, of the economy, and big marketing influences that causes large move and long-term effects. So they also have a medium and low impact data. The low importance of data and figures. So this one we are going to have no focus here, because they divert market attention from the main important factors. So let's look at the different types of high impact data, and we are in this we are going to categorize them into two, so that we are going to have the long-term effect and the short-term effects. Whereby the long-term effect, we have the interest rates, the monetary policy, which we talked about, the central bank meetings, then unemployment. The short-term effects are things like PMI, the consumer price index, that's CPI, the GDP, global domestic price, and the retail sales. So how do we trade economic data? We don't. So unfortunate. Yeah. Okay. But it depends. There are some people who trade news. If you trade news, yeah, that's for you. You trade news. Okay. Myself, I trade news. But most of the traders that I interact with, they don't trade during those CPR and those interest rates. Some of them they say it's gambling, especially for students who trade. You've seen this what do we call this? Yeah, these students who trade the ICT, the ICT students or the ICT traders, they don't trade news. So, yeah, let's continue. Yeah, for those who don't trade news, so we don't look at the actively trade news. Instead, we remain aware and manage trade accordingly, because during those news you don't know the direction of the market sometimes, and okay, sometimes you may be able to predict the market will go this way, the market will go this way, but now you find that there's a very big volatility that maybe it will swipe up the sales and the buys at once. Then it moves to your predicted what direction. Yeah, that's why it's so dangerous when you're trading news. Though I myself, I do trade news. So how do we manage economic data? Step number one, you check the economic calendar. Yeah, importance of a calendar, it will help you to track upcoming news. Yeah, and also it shows you the importance of each data, and also it allows you to filter by currencies. Maybe you want to trade this currency, this, and yeah, that's it. You'll be able to filter it. Step number two, and in step number one, on the economic data calendar, we have things like these calendars, like what do you call it? Forex calendar, the Forex factory calendar. We also have the what else? There's so many calendars. Go check them. The other one I'm not remembering them, and I've not written them down. So, step number two, you identify the high impact data. Why do you have to identify the high impact data? Example of high impact data, there are things like the CPI, yeah, and the interest rates during the Federal Reserve release and stuff. You understand, the unemployment release data. Yeah, all those things, they are very high impact. You need to identify them. Why do you need to identify them? Yeah, they filter down the news that need to be we put more focus on those ones, because they are the one that they provide volatility in the market that will drive the market either to the buy side or the sell side. So low and medium impact news cause no disruption, and we can ignore them. Yes, I've said there earlier that there are some news when they are released, when you check on your trading platform, the market did not move anywhere. Like it was just there. It's like it's moving normally. So they have zero impact. Yeah. And the other reason why we should keep track of high impact data is because they allow us to plan ahead and avoid unpredictable losses. We can manage trades or avoid them altogether if data add risk. The other thing, we keep track of economics without noise by tracking interest rates, GDP, unemployment. We can track economic performance without the additional noise of lower importance data, so we don't need them. So the other step number three, we prepare for the week ahead. And why do we have to prepare for the week ahead? Most of the traders prepare the week ahead, maybe on Saturday or Sunday when they're joining their trades and stuff. Also, they'll be looking at the pairs that they are going to trade maybe the coming week, because on Sunday and Saturday you don't have the market is not moving, like it is stranded, like it's there, it's not moving, it's closed, in short. So why do we need to prepare a week ahead? So identify times to avoid the trade, identifying times to avoid trading. Yeah, when you're trading news, don't trade through interest rates, NFP, yeah, things like high impact news, because they're going to kubomoa your account. You can imagine, yeah, you can imagine you have been given ad breaks and ad bans by your girlfriends there. Then you come to Forex and come to trade during NFP and CPI, and the market, the news will bomb your account. wipe up all your trades, including your profits and including your capital, plus you remain with brokers' money, because most of the time these news are very volatile. You find that instead of the market closing at your SL, it's closing at below your SL, not below your SL, but after it had hit your SL, it continued trading till it will close till your account will be wiped out, and you will be left with brokers' money. You'll find your account with a negative balance. You have maybe a negative balance of $30, and your broker, which you have to repay if you want to continue trading in the same broker. So to avoid such things, you avoid such news. So find focus trading pairs with interest in all clear fundamentals. So big news, formerly an existing trade, or you clearly focus on the chart, that is. So they say that failing to prepare is preparing to fail. That's a common whatever thing that each and every person knows that. So let's conclude on fundamentals. So hey, this long, 1 minute. Anyway, we continue on fundamentals. So we say we have 3 types of fundamentals: the central bank, the geopolitical issues, and the economic data, and of which we have discussed them, all of them, the 3 of them. We have discussed them, and so it's upon you to go and do more research on them. All have the different level of importance. So to conclude, we are going to be following the fundamentals. So we will follow the monetary policy. The monetary policy, the interest rates, and that are released monthly. You can check that on your sites. The monetary policy and the interest rates release of the USA Federal Reserve or any other banks that our country that you are trading their pairs. So we will remain aware of the geopolitical news and via the news. So and we said example of on our application that you can follow, you can use to track those news. It's like the CBNC. And the other one that I gave you. Other thing, the markup, notable economic data before that session is, and that's the only thing that we're going to do. And for those people who don't trade news, fundamentals are just 20% of what you trade. It's only 20%. The other percent is the other 80% is based on psychology, risk management, and technical analysis. That is. So fundamentals add confidence and clarity. That's what I said. They are not our core of trading. We use them as a filter and additional confluence that what I'm doing or what I'm planning to trade, will go to my desired direction. So the resources I gave you, I told you can check on. You can have Forex calendar, factory as your data calendar, filter level of high impact news and low impact news. You can do that on a Forex factory. They have somewhere you can filter those news, the high impact, the low impact, and the medium impact. So you can go filter them and remain with high impact news. That's what we are more interested on. Like news, I told you can check on Economist, the Economist app. You can also check on Bloomberg and CNBC, for geopolitical tracking, bank information, interest rate, monetary policy. Just use Forex factories there, and you can also try to the Fed monetary policy or the Reserve Bank of Australia monetary policy. Search that on your Chrome, on your site or your preferred browser site. You'll find all those monetary policy and interest rates that are released every month. So till next time, goodbye. I'm AJ. I'm the CEO of Trade Tribe, and I'm looking forward to give you more insights and Forex, about Forex, and not only Forex, but also how to become an Iron Man or Low Man. They are going to be in the next session. But till next time, bye bye.